Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description video and in my bio section social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I did finish the week with 15 wins and 2 losses for a win rate of 88.24%. So definitely pleased about that. I did not like trading this week. It was very choppy. Just did not like the action. Just very extreme move in one direction and just basically chop most of the week. So I just did not like the action. So I didn't trade that much this week. And so with that said, I'll get into it now. Monday, the 13th. Make sure I get the day. This is where it raged up on Tuesday. Okay, Monday the 13th, trade ideas room said SPY puts under 438.50, which is right down here, rounded down to the nearest 50 cents. I did not want to, I was looking to the downside of this. I was not looking at calls. So first candle of the day was a deep red candle. I took puts right here. Right? It was a fake out right when it made this red candle. The next 10-minute candle broke lower day just enough to trap you in it, and then it just went the other way. So yeah, but I did grab puts right here. The 43.90 puts right here when it did break new lower day. It did bounce up, but it did actually come back down, so I was able to get out. So I had the 43.90 puts at 710, and they went to from 710 to 780. Not much of a move. Then it just started slowly grinding up. Look at the wicks. I mean, just doji after doji, and the wicks were just piling up right here. And it finally get over VWAP. So when it did get over 439. What the time to get it? No, I didn't grab calls right here. I waited. I did not grab calls right there. I waited till 142 was the next trade. I should have, but I probably didn't even like the idea of taking calls at that point. Then it just SPY just ended up ripping. But I took calls at 142, which is right here. You see, it's starting to flag a little bit. Came back down. It was bouncing off the 20 EMA. Then once it got over these body of the candles right here. 440 60, that's where I took the calls. I took the 44.15 calls at 550, and they went from 550 to 740 right there. So they ended up being a nice little play. Not quite what I was looking at, but the fact that it was flagging, as you can see, stochastics was moving down to the bottom of the line. So that was a strong indication that it was probably going to pop, but kind of a weak pop. Not much of a pop at all, actually. They didn't even make it to higher day. So the pop was kind of weak. But I did take puts at 353, which is rate 353, right here somewhere. Probably took it right here. 353, yeah. I took it down here, I think. Or maybe I took it under here. I don't know. I got the 44.15 puts at $4, and they only went from 4 to 450, so they only went 50 cents. So I probably got it down here, if I had to guess. Or maybe I got it up here. I would think that I would have grabbed it right here, right around the 440, 45 area. Which is probably what I did, and it came back down, and I'm not quite sure exactly where and how I got that. Didn't go. It just the thing that puzzles me is it didn't really drop that much. It went from 45. Yeah, it dropped like 30 cents. That should have moved more than 50 cents at the money. So I probably got a bad entry. I probably chased it and didn't go that far. So I'm not quite sure what happened on that. So all I can do is speculate at that point in time. Then Tuesday we had this massive gap up, and I just did I even say anything in the trade ideas room of the 14th? No, I didn't even call anything on the trade ideas of the 14th. It's just this massive pop up on inflation being lower. But I think that the government numbers on inflation I always call bullshit, because the government's got it's got a motive. They're trying to always make things look better than what they are. So given now lower inflation numbers, just going to make themselves look good. But I always say that there's two numbers: government numbers and real data numbers, the real economic numbers. And when we get government numbers, they're more or less probably not legit whatsoever. So I wasn't buying into this. I did take puts at 1056, which is right here. 1056 right here. I took the 4400 puts at 880, and they went from 880 to 1010. So I think I front loaded this over 449, close to 450, thinking that we're going to reject the 450 area. I'm trying to get the daily up now. Yeah, 450 is a pretty big area, but sometimes they undershoot or overshoot. So I was thinking, okay, if we can get over 449, I think I even said in the room that if it gets over 449, I'll grab puts. And I think that when 4,500 puts was at the money, I grabbed them. And that's, I think, what happened. I jumped in front of the train, got lucky, even though most of the times I don't do well on days that things are just steamrolling up. But yeah, I did manage to get a little play right there. Then it popped up, the new high day. I didn't reload, did I? 1149. Yeah, I did reload this time. I didn't grab it right there. Pulled down, had a nice little tail candle. Then it chopped. Then when it broke below, I think right here is where I grabbed it over the, we'll just say 449, because you get the body of the body, and you get the wick of this candle right here. So when it did break below 449, I grabbed the 4500 puts again at 770, and they went from 770 to 1160 right there. Bounced off VWAP, stayed above VWAP, tried to go for new high day. Then it went for made a lower high. So when it broke below this area right here, 448.10, to get the body, I like to kind of grab it before the VWAP, because once if there's some momentum going through VWAP, it's usually pretty strong and you'll be chasing it. And I know it's kind of dangerous to do that, but it is what it is. If you can catch it before the momentum comes in and the IV pops, you can usually get a good move, but also it can bounce. But me, I was using this area right here, the 448.10 area, the body, and right before the VWAP break, that if it did break right before that and did get the VWAP, it was probably going to make a knee-jerk reaction where it will flush through VWAP and get bought up quickly, and that's exactly what happened. So whenever you have a VWAP play, you always going to anticipate that that's a possibility that can happen, because a lot of the times it does happen. It will flush through VWAP, and algos will jump in and they'll buy underneath VWAP to keep it going. This is exactly what happened. So if you didn't sell it right there, you didn't take your base hit, then you just took a loss. But if you're taking the puts at 520 and they go from 520 to 770, and you get a $2.50 move, and you're not taking $2.50 off a play, then you need to rethink what you're doing, because you're not going to sit there and get home runs. SPY is just all over the place. You're not going to get that massive play. So that was that was it. I was not playing that much today, so I got the put play here, put play here, put play here, and I was thinking we were going to get a dump. VWAP saved it. They just kept saving this SPY all week long, and it was very, very annoying to play, because they just would not let it drop. They just kept it hovering around 450, and I don't like that whatsoever. It was real pain in the neck to play. So the 15th, which is Wednesday, I said SPY puts on a 449. As you can tell, I was still waiting for a pullback on SPY, but it just never happened. 449, which is basically right here low. The pre-market low is around 449.60. I just didn't want to say 449.50 because we're already right in that area as it is. So I went down to 449, which is pretty much where it's been like having a little bit of resistance right here. So if it did break that we would probably end up having a pretty solid drop, but never got there. So first candle was green, kind of rejected view up, came back down. So once it broke below, I think I grabbed it right here underneath 449.80. I got the 4,500 puts at 720, and then went from 720 to 940. $2 plus play. You're not taking $2. You need to rethink what you're doing. And I took calls at 10:15, which is right here. I faked the drop, came back up this area right here. Get the body in the body. So once it broke over 450.40, that's where I grabbed calls. I grabbed the 45.15 calls at 760. And they went from 760 to 1120 right there. So that ended up being a pretty good move. It ended up being a little bit of a fake out. Then I took calls at 1111. This is the play that I probably should not have done. I took a loss right here. I took the 45.20 calls at 1111. It pulled back, bounced off view up, and it came quickly back up. So I thought if it got over this 415.20 area, we were going to pop. I know I was looking at the downside, but it was not dropping whatsoever. Of course, I got calls. I got the 45.20 calls at $7, and it dropped. Then I decided to add at 1146, which is right down here, right at the lower day. I added more at $3, making my average $5. And then it started to pop up, and then it dropped more. Then I ended up cutting it. So then I ended up buying calls at 12. No, maybe I did cut it. Maybe I bought it right here. I added 1146 right here. It started to go up, came back down. Maybe I cut it here. Or maybe I held it. No, I didn't hold it. I'm not quite sure what I did here. To be honest, I bought up here, I added down here, and somehow I ended up cutting in here, and I bought a new wave of calls at 1228, which is right here. And this wave of calls, I bought the 45.10 calls at $6, and then from 6 to 670. Now I can see why I bought that. It's over the body and the wick, right over the 450.20 area. I'm not sure why I added here and cut it, but I looked at the exits. I did cut it before. Yeah, I did cut it before I took the next play. So I cut it at 1154, which is right here. I don't know, to be honest, what I did there. Me averaging down, I've been just doing really horrible averaging down lately. Usually my average downs have been like dead on. But once in a while I go in a slump where I'm not doing that well. But yeah, it just calls me. It didn't end up dropping. So I didn't play anymore that day. I took let's see, 1 10-15, 2, the 1, the 2, the loss, then yeah, that's it. That's what I took for trades that day. So on Thursday, this just does not want to get around 450. Pre-market room, SPY puts under 449. I'm still expecting SPY to drop, but no. I use this low right here, 449. Now pre-market, I always go to the nearest 50 cents or nearest whole dollar. I don't go exact. I like going for a round number, or around 50 cents, because it's easier to remember, and plus I don't play the first 10 minutes anyway, so I just don't really care. So I wait out the first 10 minutes. One day this week I did not do that. I think it was Friday. Anyways, first 10 minute candles green. Was expecting it to drop. Green. It just kept going, and then it finally went red. I took puts at 1035, which is right here. Popped up, came back down, popped up again. These are some nasty, violent candles right here. I mean, they're looking from 450. They're almost like 60 cents, 70 cents per candle. Some of these are even more. This is like $1. I mean, you get some really severe whiplash going here. It goes up, came back down, goes up, goes back down. But right when it broke below This 449.20 area, I grabbed puts. I grabbed the 44.95 puts at 620, and they went from 620 to 810, so that ended up being a good play. Then I grabbed puts again at 1109, which is right here. Not quite sure where I grabbed it here. I think I grabbed it when I broke 449. I didn't grab it here. You push it down, you get this red candle and get a FU set up right here, and then it broke the FU right here, broke the lower day, came back up, made an inside candle. So when it broke below this area, this is where I grabbed it. I think I actually grabbed it right here at the 448.80 area, if memory serves, and I grabbed the 44.95 puts at 660, and they went from 660 to 1120 right there. So that ended up being a really, really good play. Then I took calls at 242, which is right here. Yeah, right here. As you see, I had a nice little V play. It dropped a little bit, made a higher low, came back up once it broke below over the body and the wick, which is 449.60. I grabbed calls. I grabbed the 4,500 calls at 330, and then went from 330 to 640 right there. So that ended up being a good play. So that was a good day. Not really much I really liked at this point. This whole week has just been really, really crapshoot, and it is what it is. So this is the play I took right out of the open. SPY puts, no, actually, traded as rumors, said SPY puts and the 450.50, which is pre-market low right here, and then you hit right before it opened. After I called the trade ideas room, it dropped, and so I sit in the room. If it breaks 450, I'm taking it, and I'm waiting the first 10 minutes. It popped up, then it came back down. I took puts right there when it broke 450 on the first 10-minute candle. Took the 4,500 puts at $7, and they went from $7 to $9, so that ended up being a good play. And I took puts again at 10.10, which is right here. It started to pop up. The white line is PDC. I rejected that. So when I broke below all the body of these candles right here, I took puts. I took the 4,500 puts at 690. And then went from 690 to 770. Did not much play. Would not break lower day. We got a little bit of a movement. This is just terrible action. And so basically what I was doing is I was playing off the PDC line. If it gets over 450, I just buy puts, and it just dropped. And which was sound for now. Then it did pop up. Yeah, I was able to get puts again right here at 1040 right here. Right here. So I got puts. I got the 4,500 puts again at 570. Then it dropped. So I got from 570 to 730 right there when it dropped. And then I reloaded again at 4505 puts at 1144, which is right here. I got a little more in the money, or at the money, and I got them at 540. Then after, because I was thinking the same thing, if we can get it over VWAP or get it at VWAP or at over 450, that was the play. You gets over 450 by puts, sell, put, sell, put, sell, and this time I bought puts right here, and it just popped. So I kind of like stayed with it. Then I added more to 1159 right when it made when it broke over. I think I grabbed it right here at the green line, which is previous day's high. I added more at 420, make my average at 480. Then it just grinded up. Then I ended up cutting it for a loss. I really thought for sure it was going to come back down, because usually when you have these chops like this, it will pop up to get people in something and take out stops before they drop it. Because if everyone bought puts right here and they pop it, they're going to stop them out, and then it gets people to buy calls right here for a breakout. So it does two things: it gets people on one side of calls, and it also takes stops, and then it will drop, and then it will end up messing with both sides, because the people that bought calls here would end up stopping out. The people that had puts got already stopped out, and that's what they usually do. But this time it didn't happen. They popped it, dropped it a little bit, and then they just ripped it. So it just didn't happen the way I thought it was. So I thought this was going to be a fake out just to get people stopped out of puts and mess with people, but I was wrong about that. So that last play on Friday took a loss, and I was just like, okay, I had enough shenanigans for 1 week they keep this rate around 450 all week long, and I was not having it. It was not a fun week. I don't like when they do this. This is pure manipulation at its finest. It was monthly expiration day on Friday, so they like to play games on those kind of days because there's high open interest, and they don't usually like to pay the open interest. And we used to go and play open interest all the time. If there was like a really really high open interest on a certain strike, 90% of the time they wouldn't pay it. But that was like 6 months, a year ago. You could almost bank that they wouldn't pay it. But lately, they almost always pay the call side. If there's like a heavy open interest on calls, you can't use that as a call wall lately, because almost all the time lately they will pay it. I don't know why. It's just something they've been doing lately. So you're going to notice all these little changes and stuff that happens, and make a mental note that that this stuff does happen and things are evolving and changing. And you're going to need to make mental notes of what's working now and what's not working, and adapt to it, because what's working now may not work a month from now, and things just always evolve. Because over the years, I've had the room for a few years now, and I've had to change a lot of the things I used to do. One of the things I used to do all the time is when the market would run up, and like if it has a run, like let me see if I can find like right here, for instance, it's dropping down, it comes back up. Normally I would jump into puts right here when it's rejecting the 20 EMA and VWAP, but over the last 6 months it rages through the moving averages and doesn't look back. So that's been too risky to jump in front of moving averages and VWAP to anticipate a rejection or support level, and it just rips right through it like it's nothing. You just can't do that. You're going to make mental notes of all these things that are happening, because it's always changing. Then I remember there used to be times where if it would chop underneath VWAP, I could almost always buy calls and it push through, and if it chopped above VWAP for a while, that you could buy puts and it would flush below it. That happened for a long time. You're just going to make a mental note of all these changes that happen, because a lot of things happen and change over time. So that's going to do it for the recap, and thanks for watching.